right, so just a bit of a recap what we have covered so far based on the candle patterns, right?
Yep.
We did the bullish and bearish engulfing,
Yep.
and we also talk about
The tweezers,
tweezer
tops
top,
and bottoms. Yep.
right? And also what we're going to be doing today, as promised, is to go through support and resistance,
Yep.
right?
Yep.
Awesome. Support and resistance is fairly easy to identify on the charts. So far, we have a basic understanding of what it is, but what we need to know is how to really properly identify the support and resistance, right? So basically, what the support and resistance do for you as a trader is to let you know the best place on our charts we can find buyers and sellers, right? And also there are actually major turning points on the market,
Okay.
which is why we have like engulfing candles, bullish and bearish, because those candles tell us the exact moment when the market will be expected to reverse.
Okay.
One second.
No problem.
Okay, sorry about that. A call was actually incoming, but I'm here now.
Yep.
All right. On every chart, every one of them, all the pairs that we will be exploring will always have a support and resistance, okay?
Yep.
All right. Now, support and resistance, we can find them on swing points. They call it the swing points. Like, this is an idea of what's happening for support and resistance. We're going to identify it on our charts just the same, but swing points, what it means is that it would be a long-term trade, because let's say you enter at the resistance area of the market at the top, you are opening a sell at the resistance, which is most likely you're anticipating the candles to drop, right? Now, swing trades would be like trades you will be having running on your chart, which is a MetaTrader for over 3 hours, okay? Because the market sometimes does not move from the resistance to support automatically. It moves in pips, but it does not move that fast from support to resistance, or from the resistance from the resistance to support, or from support to resistance. It doesn't move that fast.
So the swing point on top, will it be equivalent to resistance?
The swing point would be the resistance.
That point there is equivalent to a resistance point?
Perfect. That is correct.
Okay.
That's correct. So the swing point is for the resistance, and usually we can hold our trades for long term until it gets to the support.
Okay.
Now, the support, they also consider it as the floor of the market. Right? right? So how to identify the floor of the market? It's when you're seeing the candles, they're dropping, which is going lower and lower, and then for some reason it no longer continues to go down. It now reverses to go back up, right? So at that point where you see the candles reverse started to go up, so at that point where it didn't pass, it will be considered as the support level.
Okay.
Right? Now, also a key point to note, right, is that every time the market continues to go higher, the previous swing point, which is the resistance, will now act as your support. Right? So just take, for example, right here. So this was the support, but you notice the candles kept on going higher. Usually at the resistance or the swing point, it dropped, but it didn't. It went past it. So because it passed your previous resistance, that information we had now would now consider our support level. So we would have made another notation that this is the new support and not here.
Okay.
Okay. Now, not to be confused, but this support level is also a support, but what we will be working with is the most recent information, right? Because as a trader, you want to stay current all the time whenever you're trading. And that entails looking on what happened to the left.
Yes.
Okay, so let me just show you how you would identify a support level on your chart. Sorry.
So I was going to ask you the trading view platform that you are looking, is it licensed? Is that correct? Did you buy a license for it?
Oh no, it's completely free.
I can't get it free.
You can get it free. You just go to tradingview.com, step 1, and then it's gonna ask you to log in, and you can log in with your email address.
How did you change the screen to black?
How do I change the screen to black? Okay. All right, I'm gonna show you. Now, TradingView, they have a theme. I'm gonna show you how to find it. So the first thing you would have to do is to go where it says search.
Yeah.
And you type a particular pair in. You can type in any pair, like Euro USD.
Okay.
Okay, you're gonna see a lot of information popping up, especially if, say, you have it on all.
Yes.
Right? Once you type in Euro, you can actually scan the list and select the pair that you want. But we're gonna be working with Euro USD.
It's like the background that I have is white. And then I have a mess.
I'm gonna show you to change it, for sure. So when you just start on the trading view, it's a white background, for sure. But to change it, we go here at the menu.
Okay.
And where it says, this is the background that you're seeing, right?
Yes, I'm seeing this, and also have lots of yeah, I think this is it. Hold on, let me see this. Yeah, you're right. Okay, go ahead. I think I can see that. So you go there and you change it to back. Okay, you change.
And then
you go there and you change the dark color theme.
Dark color theme.
Okay.
Right.
Okay. And okay,
and
very
automatically we're in the dark color.
Okay, very good. Okay. Well, I wanted to play with this, but then I was encountering this. Okay.
All All right. So what you will always find, let's say you were on a particular pair and you did like your notations on it.
Yeah.
It will always be there for you.
Okay. Unless you delete,
Right.
unless you remove it. Okay.
Unless you remove it. Right.
Okay.
So I'm going to remove these notations here, for us not to be confused.
Yeah, because this is what I want to test. What I want to test is, for example, the 4 hours trading period from my starting point to the end point, how that really looks like. This is what I'm very, very curious to see when we will be testing this. Yeah.
Trading. Okay, not a problem. By next week, we will be like practicing on our MetaTrader for some trading for sure.
Okay.
So we will be seeing how that's going to play out for us. But for now, we just want to get the concept of the support
and the resistance points. Yep.
The resistance point, right?
Yep.
And also, I'm not sure if we had touched on the market structure, which is to know when the market is in an uptrend and when it's in a downtrend.
Yeah, we can look at the tweezer, bottom, top and bottom as well, the tweezers, yep.
All right. Now, in addition to identifying the support and resistance, right, the first thing we will normally do is to put it on a time frame, which is the candles, how they're forming in the market. So let's say we did 4 hours.
4 hours, yeah.
So these candles would have represented every 4 hours in the market, right? Now, right here, we can see we have different time frames going all the way to 1 second, right?
Okay.
We never use the 1 second time frame to observe our charts, okay? Never use, so from 1 second to 30 seconds, these will be out of it.
Okay.
Okay. We can go as low as 1 minute, sure. But at the moment, I will not recommend trading on the 1 minute chart. It is very risky.
Okay.
Right? So the lowest I would recommend you to use will be the 15-minute chart.
Okay.
All right. So for today, our exercise would be identifying the support on the 4 hour and the 15-minute. Okay. Now, whenever you start your analysis on the 4 hour chart, which is a higher time frame,
yep,
then you move to the 15-minute. That scenario is called a top-down analysis.
Okay.
Right? So we're going to see what it looks like on the 4 hour first, and then zoom to the 15-minute to see what the support and resistance look like there, because every time frame has a different support and resistance.
Okay.
All right. So let me delete this. So this chart that we're using today, it's the Euro USD, right?
Yep.
Now, next week, what we will be doing is, as I mentioned, we will be working on the MetaTrader 4, and also you will be getting an opportunity to share your screen to also make a few notation, which I will be guiding you for sure. Okay?
Yep.
All right. So let's see. So far, just to get the definitions correct, right? So this is just a visual idea what the support looks like.
Yep.
Right? And resistance, which is what we also can call the swing point.
Yep.
Right? Now, let us carefully get some definitions correct on our support and resistance level so that we fully understand what it really is. Okay?
Okay.
All right. So in our book, they don't necessarily tell us exactly what support and resistance is. Okay, as you can see. So that is why I'm here to help you, because as a trader, looking through this book, we are seeing the word support and resistance, no other information matching towards it, as you can see.
Okay.
Right? So just to help you, so a support is a point on our chart whereby the candles went in favors for buyers, which means that they started to move upwards in price, right?
Okay.
So you see what happened here?
Mm.
It was dropping, then it started to move upwards. So whenever we see that upward motion, at a point whereby the candles didn't went lower, which is past that point here, this area would have been considered for support. So the support is basically a point whereby the market no longer continues to go down in price, but now reverses to go up.
Yep.
Okay, that's what the support is. And then for the swing point is when the candles were in favors for sellers and decide not to continue to go up, and then starts to drop in favors for sellers.
Yep.
Right? So let's just now observe some scenarios for the support and resistance. So what we're doing right now, Mr. Jose, is to analyze our charts for the support and resistance. Let me just move this line. Okay. So as you can see right here, this was a swing point, right?
Yep.
As you see, the candles no longer went past this point. So what we do right now is to go to our line area and select a horizontal line, and then place it here. Okay.
Okay.
That's our swing point. We're going to make some notes, which I will be sending to you. All right. So we see the swing point, and then you notice right here.
Yeah.
The candles didn't went even lower, so it started to reverse.
Yeah, that's my supporting point.
Support point, right?
Yep.
Just like what we're seeing right here. Swing point, support.
Yep.
Right? Can't miss it. Perfect. So what we're going to do now is to press on the icon T.
Okay.
Then press on text. And then tap on our chart so that we can make some notes.
Yep.
Okay. So we
That's
just gonna put
swing.
Swing point. And then what we can do to build up this note, we can move it around.
Yep.
Right? So we know at that point it's the swing point for sure. But as you can see with this note, it might confuse you because you're just going to see swing point. But what we want to have is a notation pointing to the swing point. So I'm going to delete this note. So to delete it, you just double click on it, and you're going to see the icon remove. All right. So what we're going to do is to not to select the icon T, but select the option that tells you about annotation tools.
Yeah.
Right. And we're going to select the best one, which would have been the call out.
Okay.
Right. Then we just tap on the area, then we can make our note. Swing point. Then press OK, then we can drag it. Right?
Okay.
So it is now more understanding that definitely for sure this is a swing point.
Okay.
Right now, right here, as you can clearly see, the candles no longer went lower; it reverses. Right, this is a clear reversal. So this reversal area is known as our support or the floor for the market. Okay.
Yep.
All right. So let's put another notation. I'm just gonna put support level.
Yep.
So as you can see, Mr. Rossi, the support and resistance, they are very plain on our charts. It's super clear.
Yeah.
All right, so you can't miss it at any time because it is so evident that even a baby can easily identify the swing point and the support.
Yep.
Right now, this is just one area for the swing point and support, because if we look closely, right, you notice on this illustration there was a situation whereby the candles went above the swing point.
Yeah.
Right, same thing happening here. The market, which is the candles, went above the swing point.
Yeah.
So this swing point now would have considered to be a support.
Yep.
Right? So support.
Yes.
Now, at this new high would have been another swing point.
Exactly. Yeah.
Right? As you can see, the same thing happening. So at swing point, we expect a drop. At support, we expect an increase in price.
Yeah.
Right? So all the time you will expect to have different swing points and support.
Yes.
But the best way to work with the information that you will be analyzing is to work with the most recent one. Right? Because this swing point, this support, this is what we also call a zone, a trading zone. So let's say in the morning or day or whatever time period you pull up your chart and you notice there were no candles above or below, this will be the zone you will be working with. Okay?
Yeah.
So it is important to mark your swing point support to know the area you will be working with, to know how you will position your trades. Okay? Now right here, so based on where we're at right now, right, you notice it went below, because right here would have been our support level, but now the candles are even below it, right?
Yep.
Because this would have now been our new information we'll be working with. Or it could be here.
Yep.
Because right here was another swing point. Right? Now if we were working with the most recent information, right here to right here, let me just change the color. Not to be confused, so the yellow would be the zone we would be working with now, right?
Mm-hmm.
So right here would have been our swing point, right here would have been our support.
Yep.
Right? So as you know, as a trader, you will be looking for candle patterns that is either at the support, which will be a tweezer bottom, or a bullish engulfing candle. Right?
Yeah.
And most cases, even without doing your support and resistance, once you see those candles form, you know which button you should be pressing, because looking at this candle here, this pattern, this would have been almost like a tweezer top.
Yep, it is.
Right, and it's at the swing point, right?
Yeah.
So, as a trader, you will not hesitate to open a sell because you have the swing point plus a tweezer top. So the only direction you should be heading is for a sell to your support.
Yeah, I have another question on curiosity. If I open on sell, all the others are doing the same analysis. Will they buy?
Wait, say it again.
So a sell means that I'm taking my resources and putting them out to the market. Is that correct?
Right.
And the buy means that I'm taking resources from the market to me. Okay? So if I'm selling, does it really mean that there are people out there that are really prepared to buy?
Indeed, because what's happening as well, because it's depending on the time frame that we're on.
Okay.
So if we scroll down to the other time frame, because these candles form every 4 hours, right?
Yeah.
Now, throughout the 4 hour of the day, it went up and down, but it eventually, based on how the candles are forming, opening and close, for the day on the 4 hour, it would have been going down. But on the 15-minute, you may be seeing a different information.
Okay.
So it depends on the time frame that you will be using to trade will determine if you will be buying or selling. Because most naturally, on the 4 hour, we're seeing an opportunity for a sell.
Okay.
But if we go to the 15-minute, you're going to see scenarios maybe for buyers, right? And it is like zooming in on the candles, like using a microscope to see exactly what's happening in the 4 hour. Okay. Whenever you go to the lower time frame.
Okay.
Right, so it can be tricky. Some persons will be buying and some persons will be selling at the same time.
Okay.
So it all depends on the time frame that you started to use. But one of the greatest opportunity that you will have is that on the 4 hour time frame, it is more consistent. Right? So the 4 hour time frame will actually tell you the direction that the market is going versus using a 15-minute or a 5-minute time frame. You're going to see lots of motions on the chart.
Yeah.
That can get you confusing. So to reduce the confusion, we actually will be mainly using the 4 hour time frame. Right? And always remember now.
So, Dire, if I am, when we will be trading, basically what I'm getting is when we'll be trading, I will always be looking at least 3 factors. One is, what is the engulfing candles patterns that I have? Right. Second, what are the conditions of my tweezers, bottom or top, that will determine if I am on up or down trend mode. And then third will be then me looking at the swing points and the support levels, so that with the combination of the engulfing candles, the tweezer bottom or top conditions. So the support and swing levels will also give me the trend levels, and then if all of these conditions are really clear to me, then, and if it was indicating buy, then I'll go for buy. If it was indicating sell, then I go for sell, because all of these things are matching. Does this represent the best way to be looking at it?
That is correct. Totally correct.
Okay.
Right? And also, because what happened, as you can see, based on our illustration here, we will be having different swing points and support, right?
Okay.
Right? So once you can identify the swing points and supports on your chart, what you will be doing is to work with the most recent one, right? So it is easy to identify the swing point.
Okay.
Very easy. And also the support as well, because you look to the left, what happened the last time, because most times you're going to be on the right. So you look what happened on the left and you mark your swing point and support.
Okay.
Right? That's the zone that you'll be working with. But sometimes, as I mentioned, based on the pattern that you see, remember that we will be going 50 pips the most in the direction.
Yep.
Right? So we would have gone 50 pips, but what can happen sometimes is what's happening here. Sometimes the market will go beyond 50 pips. Okay. So that's why it creates this new support. This was the support, but then it went higher. So this swing point would now be considered a support. It went higher and higher, right? Okay. So the principle that we will be using is to not to get distracted by the market keeps going higher and higher. At some point, we will be closing out that trade. So 50 pips will be good enough for the day, okay? Just for the day on the pair that we will be focusing on.
Okay, makes sense.
Right? So what if we, based on, because what's going to happen, the market has its zone where it normally operates. So this will be, this what we're seeing right now is the current zone for Euro USD. A lot of traders are anticipating the swing points and the support levels. Right? So we can also use these information, or we can stick with the principle to do 50 pips the most. So if you were selling, at least, you know, at the support level would have been one of your take profits, which is the point where you will exit. So that's what the support level and swing point helps you to understand. So if you were selling, the support level would be the point whereby you want to exit that trade.
Okay.
Right? Or if, say, you are anticipating to continue beyond the support, that is okay. Right? The same thing happened here, because at the resistance, the traders were anticipating it to drop, but it didn't. It kept on went higher and higher and higher.
Okay.
Right? So scenarios like that, we will be adjusting our stop loss and profit, which we'll be doing next week for sure. Right?
Okay.
Because let's say the market is going in your direction, but it is now at a critical area, which is the swing point. Instead of losing all the money, because at a swing point it could drop and go right back to your entry, right? So what we would do as a trader is the 30 pip stop loss that we originally set, we will now adjust it and put it closer to where the market is at in price, right? So that way, if say the market starts to fall, it will fall right to the adjusted area and not go all the way back to our entry.
Okay.
Okay. That's what we will be touching on next week. So we will be working a lot on the chart next week, a lot more, that is, for sure. But for now, it's just to get a basic understanding that the market has several swing points and support. And how you identify them is that you look to the left, right? So this is to the left of this information here. So at least you could have marked that information off, the swing point and the support. Now, because the market moves from left to right, you are now looking for the new swing point and the new support. And as you can see, right here would be a perfect swing point for us.
Okay.
Right here, perfect support. But as you can see, the candles went to the support, and right at this zone, let me just put a notation here. Once I'm trying to get the right icon. Where did I put it? Okay. No, that's not it. Okay, here we go. Okay. So I'm using a rectangle here to show you that this area, as you can see, it broke the support, right? Because we went from the swing point to the support, but sometimes your trade is, if say you were doing a 50 pip move, based on your entry, you will see a scenario like this happen where it went past the support.
The support level.
Not to panic. Not to panic when you see that happen. Right? It's because based on your entry, the distance that you calculated, right,
it's over the support level.
Right, it's over the support level. So you will see scenarios like this play out sometimes. Right? Because sometimes some traders, based on their entry, they are anticipating it to go beyond the support area for the market.
Okay.
And you will find yourself in this situation as well. Okay, so not to panic, it's just a normal scenario for you. So what you would have done, because the swing points and the support, they are basically sending you a message that it is a strong reversal in the market. Right? The market can reverse at any point, but usually the support is the strongest. Is whenever the candles go here, it is most likely to shoot to the opposite side. Now, in this scenario, whereby it went to the support, but guess what? There were no candles telling you or telling us that it's gonna reverse for buyers, right? You notice after it went to the support, the next candle form was a red candle.
Yeah.
Then a small green, right? There's no scenario we had studied that had a large red then a small green, right?
Yeah.
So as a trader, what you would do is to continue. You have two options. You can manually close your trade because we're in a danger zone for a reversal to shoot to the top.
Okay.
Or we can actually move because our take profit was beyond this area. So what we would have done is to move our stop loss closer to the support area, because we know for sure it is a strong zone for reversal. So if say you were in a good amount of profit, you can move it close to the support, right? The number to the right that we're seeing, which is let's say for example 1.17821.
Yeah.
Right, that would be our adjusted stop loss.
Okay.
Right, so we will be observing scenarios like that next week. So let's say it went past the support, the original support for the market, then we have to do this what we're doing, which is to adjust our stop loss in profit as a precaution.
Yes.
All right. Sure. So far, the greatest thing about swing points support, this is just on the 4-hour time frame, right, that we marked. So let us observe what it looks like on the 15-minute time frame. Zoom down a bit. As you notice, we have to do a lot of zooming.
Yeah.
All right. So this is what it looks like on the 15-minute time frame. All right. It is also evident the 15-minute time frame has much more support and resistance, right? Swing points. Because on the 4-hour, the point that we marked for the swing point was all the way at the top.
Yeah.
Right here was another swing point.
Yeah.
Okay.
Yeah.
Let me just
and before here. Yeah, and before it you had a support.
Before we had a support right here.
Yes, exactly. A support level.
Perfect. Yeah. Right. So we had multiples. Right?
Yeah.
Even if you look over to your left, you'll see multiple information as well. Right?
Yeah.
So that is why using the 15-minute time frame, you're going to be always doing support and swing point. That can get you confused as a trader, because every time you're going to have to move your information to the new support and swing point. Well, on the 4-hour, it didn't show you this much support and resistance, right? It just showed you one thing.
Yeah, it requires a lot of work on the 15 minutes. A lot of work.
Lots of work.
Yeah.
Lots of work.
Yeah.
Right. So because it requires lots of work, what you can notice is that on the 15-minute, the charts move faster. So traders would use the 15-minute. Normally, they don't stay in the market long, right? Because they're just in for quick money. So if any day you want to make some quick money, you go to the 15-minute chart.
Okay.
Right? But if you're not in any rush, you can do the 4-hour.
And the stop loss limits would not be the same that I'll be using for let's say 4 hours trading as well.
Right, it would have been the same, because on the 15-minute it would be short term. So a short term trade would mean that you would be using half the stop loss, which is about 10 to 15 pips.
Okay.
On the 15-minute. Because as you can see, the distance are shorter, right?
Yeah.
Every time. Short distance. So you don't want to be staying in these trades long.
Yeah. Wow.
So that's the importance of doing the top-down analysis. So as you can see, which I am glad that you observe it, is that on a 15-minute chart, you will be doing a lot more work. So for the lot more work, you will be seeing in the market less, short time.
Yeah, this is very, very intense. Yeah.
Right. These distance are short, but if you went back to the 4 hour, we notice you could have been in the trade for a long time without
Yeah.
even consider to move or support and resistance,
Yeah.
which is the swing points.
Exactly.
Here, right? Because you notice on the 4 hour, the swing point took a very long time for us to move the information around.
Exactly.
So what you will find on the 4 hour is that traders who use the 4 hour will be in these type of trades for like a day or two, or maybe even the whole week, right? Even the whole week, you can find that.
Yep.
Right? So, but do you have any concern about this topic so far?
No, it's just a matter of practicing, but so far the knowledge is good. I think it's very, very good.
Mm-hmm.
Yeah. I think when we will be practicing, questions will will arise. So for now, I'm okay for what you're sharing.
Okay. All right. So you just remove this. But the general concept and idea is looking on the swing points and the support, which is the reversal. Those are the areas you should be focusing on. So
Yep.
let's say we did our swing point, our support here and swing point. You won't be making any money because this information is not useful for you over here.
Yeah.
Right?
Yeah.
You have to focus on what recently happened.
Exactly. Yes.
Right?
Exactly.
But at least you can still do these marking ups just to get an idea. So this would be a pattern for the swing point. So looking over to your right, at least you can look for the same reversing points.
Yeah.
And do it, make the notes again over here.
Yeah.
Can't miss it. 2 points always will be there. Support always will be there.
Yeah. Very good.
Right, but please remember that regardless of the trend, we can find scenarios whereby we have several swing points and several supports. Okay, but you will be working with the most recent one.
Yep.
Okay.
Very good.
So I will be sending you this illustration here.
Yep.
Just to have to notes whenever you're reviewing, at least going back to trading view, it can, you can remember it for sure.
Yes, no problem, sir. No problem. Thank you.
Right?
Yeah.
Most welcome.
Yeah.
That's right. So far, I really like what's happening. So next week we will be on the MetaTrader 4.
Yep. I will be adjusting my trading view now that he showed me how to change it to the color to change the color, background color. And then try to practice during the weekend. Tomorrow will be holiday here, so I'm going to take the time to play a little bit with it.
But tomorrow's holiday. Oh.
Yeah.
Okay, I hope you enjoy,
Yeah,
practice for sure.
Our holidays here are so busy as well, so.
What holiday will it be?
Holiday?
What type of holiday?
This is the date that our first president got born, so we put that as an holiday to also honor his death But it's really to honor the first president of the Republic. So the 17th
I
of
see.
September. Yep.
I see. Very interesting. Oh, quick question. Elena told you about the derive, right? About one of our crazy ideas of naming our potential first baby Spike.
Of what? Say that again.
So did Elena told you that we were planning to name our first baby Spike? Because it's something that happens regular on Boom on that chart.
Oh. She and I most likely are going to meet during the weekend to discuss. She has been busy as well, but we have other matters to discuss, and we're going to include this as well in the discussion.
Okay.
I will be landing into Drive as she gives me, if she gives me the green light for me to do that, whatever I want to do. But very promising. I see lots of emails coming towards me to take some actions, to start trading, to start doing things. So far, not done yet, but we're going to work on it. Yeah.
You see.
Very good. Well, thank you, Diray. Let's meet again on Tuesday, okay?
Okay.
Thank you,
All
sir.
the best until then.
Thank you, sir. Thank you.